All right, we're going to do a little napkin planning. That's a very quick way to evaluate a business, whether it's something that we want to pursue. We're going to make some assumptions, come up with a few numbers, do just some very simple math. So, what we're going to do is we're going to take a look at napkin planning for a yoga studio. And this is actually based off of work that I did with a client where she was evaluating whether or not she should invest in this yoga studio or not. So we need to take a look at some capacity. So we're going to take a look at saying that this business is going to be open 6 days a week for 50 weeks out of the year. So this allows for some holidays, downtime, vacation, and so forth, things that are unexpected. So we have 6 days times 50 weeks, so 6 times 50. So this is going to give us 300 operating days per year. So this is just our first assumption we're going to take a look at. So we're going to call that our capacity. So we're going to take a look at that. And let's take a look at what some of the expenses are in running this business. So in this case, we're going to say we're going to have inclusive rent. That's inclusive, which means it's going to be utilities included in that. So we'll just say that includes utilities. And we have we're going to operate this business off of our cell phone. And so we'll put $100 a month into that. We're going to need some internet access, and so we'll pay $100 a month for that. We're going to have some other expenses, and we don't know what those are yet, but we're going to say that those other expenses, we're just going to be putting $500 down for that. So we're going to say that each month we're going to have $2,200 in operating expense. So those are our expenses. Now, on the revenue side of this, we're going to assume that each class, on the average, is going to have 14 people attend. So that's an average. Some of the classes will be smaller, some might be a little bit larger, but this gives us a number to work with. So we're going to say that each class is going to have 14 people in it, and that they are going to pay an average of $7 per person per class. All right. So 14 people paying $7, so 7 times $14. So that's going to say that each class is going to generate $98 in revenue. Now, we're not teaching those classes. We're actually going to hire instructors to do that. So we're going to split the revenue with them. So we're going to take that $98 class and we're going to divide that by 2. And so that's going to say we're going to pay them $49 to the instructor and $49 to us. All right. So that's pretty simple. So this is the number that we're going to work with. So each hour class that we're going to run is going to generate $49. And let's say we can run 5 classes per day. And then we know each class is $49, so 5 times $49 is going to give us $245 per day that we're going to collect each of those operating days we have in the business. So there we go. There we have our revenue. So now let's kind of do some evaluation here. We're going to run 300 operating days, and that's going to give us $245 each for those days. So that on the annual revenue is going to generate $73,500. So that's per year. Now we calculated some expenses up here, and we said those are going to be $2,200 per month, right? So $2,200, this is 300 operating days, so that's for a year. This is per month, so we're going to need to multiply that by 12 to come up with our expenses. So we're saying $26,400 per year is our expense for running the business. So that gives us a gross margin here of $47,100. So this is our profit off of the business. So Uncle Sam says, well, you're going to have to pay self-employment tax on that. So we'll pay our self-employment tax at 15%. It's 15% of this $47,100. So that's $7,065 that we pay in tax. So after we pay that, we've got $40,035 left. But we also have income tax because we generated income as a profit. Income tax. That's going to vary widely depending on what your marginal rate is, what other kind of income you have, and so forth. We're just going to assume right here that between state, federal, whatever you're going to pay, we're going to put 20% in here. We're going to be a little bit more accurate when you do your own napkin planning on your own business. In this case, we're going to say 20%. It's 20% times the profit, $47,100, not after you've paid your self-employment tax. So you calculate this 20% tax here, and that's going to give us $9,420 in income tax that we have to pay. So our free cash flow after this is going to be $30,615 per year. This is our annual net revenue. Okay, so I like to take a look at things on a monthly basis as well. So we're going to say that's 30,615. We're going to divide that by 12 to give us a monthly amount. So essentially, when you have this business, you're going to operate 6 days a week, 50 days a year, giving you 300 operating days. You're going to pay rent, phone, internet, some other expenses. That's going to generate an expense each month, whether you hold a class or not, of $2,200. So those are fixed expenses. We have classes. We're going to run an average of 14 people per class. We're going to pay, each person's going to pay $7 per class. And so that generates $98 per class hour. We split that with the instructor. We take half, they take half. So we generate $49 of income. And we have 5 classes per day. These are 5 one-hour classes in the day. So 5 times 49 gives us $245 that we operate each one of these business days. So in our operating days, we said we've got 300 operating days that we set up here. And we multiply that times our revenue that you generate each day, so 245, to come up with this 73,500 per year in income that it generates. The expenses, 2,200 a month for 12 months, gives us an annual expense, 26,400. We're going to pay our self-employment tax. We're going to pay our income tax. That's going to generate free cash at the end of the year, $30,615, or on a monthly basis, $2,551. So that's a way we can take a look at a business and determine, is this something that we want to invest in or that you want to take the time to work with? It may or may not be right for you, but napkin planning is a great way to start that. So this is Scott Smith. Have a fabulous day.